Hi, it's Sunday, 31st of January, 2016. I'll be talking about what's been happening at the LBMA again, the London Bullion Market Association. And I'll also have a little summary of what's happened in the markets in the first month of 2016. As you know, I made a video. My previous video was about what happened to silver on Thursday and Friday. On Thursday, silver futures and the spot price were trading around 1440, and the LBMA fixed the price of silver on Thursday at $13.58, which was almost 6% below where the market was. And then on Friday, the same thing happened, but not to the same degree. Silver is trading around 1420 and they fixed it at 1408. And silver never traded at that price either. So on Friday, I decided to give a call, phone call here in England. First to the FCA, which is the Financial Conduct Authority. They're like the SEC of the UK. They used to be called the FSA, but they changed their names a few times. And I spoke to a lady there, and I said, I'd like to tell you about what's been happening in the LBMA. And she said, what? I said, the LBMA, and I said, it's the London Bullion Market Association. And she said again, what? And I said, London Bullion Market Association. And I said, it's regarding the silver market. There's some nefarious activity by the banks that operate that fix. And she didn't even seem to understand what I was talking about. And then she said, oh, we do not regulate silver because it's not, a financial instrument. So you'd have to, call the LBMA. But the LBMA, they don't self-regulate. So I said, oh, so you don't regulate silver, even though it was banks that were, doing, no good, or, doing the nefarious activity. And she said, oh, if they're trading in something that we do not regulate, we do not look at the banks. And I said, oh, that's strange. So, there you go. The FCA doesn't care about the silver, and I would say the same thing about gold, because it's not regulated either by the FCA. And even though it can be banks that are doing, the rigging or the fixing, they will not look at it. So with that in mind, I decided to maybe call the Bank of England. And the good thing about calling the Bank of England is that they pick up your phone right away, your phone call right away. They don't make you press one for this or that. And I called General Inquiries Desk, and I spoke to a man there. He was quite nice, and and I explained to him what happened at the LBMA, and I said, these banks that do the fix, they fix the price way below where the market was, almost 6%. And I think that's not right. And he said, well, we do not regulate the banks. And I said, well, I thought you were the Bank of England. He says, oh, we do regulate them under the Prudential Regulatory Authority, but we do not regulate their conduct. So I said, so if they're like rigging the markets, you won't look at them? And he said, no, that's for the FCA to do. And I said, well, the FCA told me they do not regulate banks trading in silver or gold because they're not financial instruments. And he said, well, that's the way it is. And I said, but you're related to the LBMA. And he said, no, we're not members of the LBMA. And I just left it at that, because trying to talk to a brick wall. So, the Bank of England, the way they regulate the banks in England is just like giving them like prudential regulatory advice of how to run, their books, their balance sheets, their risk, and their lending policies, but they actually won't regulate the bank, their conducts. They, if traders front run, or manipulate things, It's not up to them. It's apparently up to the FCA. And if they do it on silver and gold, no one's looking at it. So who's really, you know, there's no one regulating the silver and gold market, the bullion market in London. Bank of England doesn't want to know, even though the Bank of England works with the LBMA. You know, LBMA uses the Bank of England to store a lot of their physical gold, if they've got any left. So with that in mind, I looked at the history of the LBMA on their website, and I'll put the link to it, and it's all there. And it says 1931, they've got a timeline, very good timeline, starting back in 1270, I think 1270 when the mint was, built in London. And it says 1931, Britain came off the gold standard. Britain came off the gold standard. Sterling devalued. European investors bought gold bars and coins, whilst Indian investors sold large quantities. Bank of England installs a direct phone line to the London gold fixing, which remained open in place until 1968. So if Britain's not on the gold standard, why do they have to have a direct phone line to the LBMA London gold fixing? You know, it's not part of the monetary system anymore. They left it, you know, strange. So that direct line remained in place supposedly for 37 years. And I say supposedly because can you really trust what these people tell you? Do you really believe what, unregulated, institutions like the LBMA and the Bank of England tell you? I don't. And so I've gone forward. 1961, LBMA time line. Pool set up to defend gold price. Gold pool of U.S. and main European central banks set up to defend the gold price. Pool operated by the Bank of England via its direct line to the London fix. And this is not, it says defend the gold price. It's not defending the gold price against drops. It's defending, it's defending the value of the dollar, really. It's defending against gold price going up. So this is very misleading what they should say, in the LBMA timeline, that's defending against the price going up, which is it really defending the price? No, it's like suppressing the price. So that started in 1961, and that was an overt operation, so everyone knew the Bank of England was involved. Then you go up to 1968, collapse of gold pool. Collapse of gold pool on the 15th of March. The authorities closed the gold market for 2 weeks following surge of speculative buying. So when people are buying gold and silver and the price is going up, it's speculative. But when it's the purchase of stocks, it means the economy is healthy. It's not speculators that are buying stocks. So on 1st of April, the primary fixing changed from the pound to the dollar and took place twice a day, with the afternoon fix introduced to benefit the New York market. Benefit, well, maybe it's like to make sure they manipulate the price in the afternoon in London so that, it would keep the New York price under control. So my point here is, I've called the FCA. They said, no, we don't touch silver or gold. And I called the Bank of England. They said, nothing to do with us. And then you read the history of the LBMA, and the Bank of England is hugely involved in it. And you might say, oh, that was only until 1968. But I bet you they still have a direct line, maybe not to the fixing, but to the people that do the fixing. So virtually, it would be interesting maybe to do a Freedom of Information Act and ask for the Bank of England to give a list of all its direct lines to London institutions. That could be something I might do. That probably won't be successful. So let's go to the markets now. Well, start with gold. Looking at the Kitco chart here, so the U.S. dollar was up 5.35% for the month of January. So pretty good move for gold holders. And I think the stock market didn't do as well. The Dow was down 5.5% in the month of January, even though it went up over 2% on Friday. So still didn't manage to do that well. So gold outperformed the Dow by like 10%. In British pound terms, which interests me, of course, I live here in the UK, gold went up by 8.97%. So that's a pretty good move. The pound didn't do it very well. That's why, you know, when you hold physical gold or, you know, gold investments, 9% move basically in 1 month. Against the Swiss franc, 7.65%. So pretty good there for people in Switzerland. For euro, holders 5.63%. So the euro hasn't really moved much against the dollar. Is only down like 1/3% on the year to date. Canadian dollar 6.37%. Japanese yen 5.99%. So yeah, gold's had a good start. We'll see what happens, you know, in the rest of the year. Hopefully it will continue. In terms of the stock market, so the Dow was down 5.5% for the month of January. S&P was down 5%. NASDAQ 7.86%. And the New York Stock Exchange, excuse me, Composite Index was down 8.5%. So yeah, and I think the Toronto Composite Index was down 1.4%. In terms of bonds, the bond market, Treasury yields, the 30-year yield was down 27%, 27 basis points, sorry, this month of January, so down to 2.74. The 10-year yield, 1.92, down 35 basis points. The 5-year down 43 basis points to 1.33. And the 2-year was down 27 basis points to 0.77. So overall, the curve has flattened in the U.S. in the month of January, which is a recessionary sign. If the curve inverts, that's a sign of a recession. We're not near inverting here at all, but flattening implies that we're going towards that maybe. The 3-month yield went up 15 basis points, and it's at 0.31. In terms of prices, looking here, the Bloomberg U.S. Treasury Bond Index, it was up, let's see, well, they've only got the 52-week return. So basically, yeah, bonds, treasuries, except for, you know, 3-month bills, they went up in price because the yield dropped. So the big winners, treasuries and precious metals, you know, for the month of January. So yeah, that's it for today. Let's see, you know, what happens in the LBMA if they keep manipulating the silver fix, and let's see, you know, what gold and silver continue to do. You know, I think the last few years we've had good starts to the year and then disappointing, you know, second halves. Hopefully this will not happen. And the other thing about stock markets, there's a note saying that usually what the stock markets do in January is a sign of what will happen for the whole year. So, you know, S&P being down 5% in January does not bode well for stock market going forward for this year. Have a good end of the week. End of the weekend, and I'll talk to you next week. Bye.